Hello, everybody, and thank you for tuning in to the Phoenix National Network. We are live, and I am your host for the evening, Richard Ciuzio, Senior Loan Officer with Hudson United Mortgage, and I am licensed in the great states of New York, New Jersey, Connecticut, and my hometown, Florida. So, the topic. Oh, first off, hold on. I want to thank each and every one of you that are tuning in and taking the time to watch, whether it be on your Amazon or Roku devices, streaming from YouTube, Facebook, or LinkedIn, and anybody who's downloaded the app on the Android or their iPhone devices. Our topic tonight is a continuation of my segment titled, What Do You Need to Know About the Home Buying Process? Last week, I spoke about what you need to get pre approved. Tonight, I will continue and piggyback on that segment. How much do I qualify for? How much do I qualify for? It's a very good question and one that's going to vary from borrower to borrower. Everybody is different. All borrowers are different and all loans are different. So I have to tailor each loan, each pre approval to fit the borrower's needs and specifications. All right. So let me jump right in. My first topic on it will vary from borrower to borrower. How much you qualify for is going to vary from borrower to borrower and is based on how much income you have on a monthly basis. All right. And these are the questions that I'm going to ask you that maybe you should ask yourself. All right. What is your income structure? Are you a salaried employee? Are you an hourly employee? Are you full time? Are you part time? Are you earning any bonuses, overtime, or commission? And if so, for how long? And if so, is it continued or is it guaranteed? Is it likely to continue for X amount of time? All right. How long have you been working? That's key. You need to be working for a certain amount of time. Based on these questions, you know, it, qualifying for a loan, it's like doing statistics. I got to take all of these variables into account when I'm calculating income and working on you. That's how I do my due diligence. All right. How long have you been working? Do you have steady employment with no lengthy gaps of unemployment between jobs? Or maybe you're fresh out of college and you just received a new job offer. No worries. I can help navigate through that too. If you want, give me a call. If you're one of these people, if you would like to have a discussion, if you're curious about your income, give me a call, shoot me an email. Let's have a conversation. Let's see what we can do, what kind of employee you are, what kind of worker you are, and get rid of phase one on your income to see what we can get you qualified for and how much you qualify for. All right. Part two is it's going to vary on how much expense you have on a monthly basis. What are your monthly expenses? What kind of monthly expenses do you have? Do you have student loans? Do you have car loans? Do you have car leases? What kind of credit card debt do you have? Do you have any credit card debt? Do you have any credit? Um, Do you have any other mortgages or home equity lines of credit on those properties that you own if you own any other properties? Do you have any personal loans? Have you co-signed for anybody else on any other loan or any other debt? Maybe you don't own any property, but maybe you're a co-signer and you're entitled to that debt or you're liable for that debt. So these are questions that I'm going to ask to figure out how much expense you have on a monthly basis. Why is that important? Between the income, what kind of income you're making on how I get an average and how much expense you make. Why is it important? Because that is how I'm going to calculate your debt to income ratio. What is your debt to income ratio? Debt to income ratio, aka DTI, debt to income ratio, DTI. It's a calculation of your monthly expenses divided by your monthly income. All right. This is how myself or any other broker or any other banker determine what you can qualify for. It's two magical numbers. It is a front end expense and a back end expense. There is a front end DTI and a back end DTI. What is your front end DTI? Well, your front end DTI is your proposed, proposed, proposed monthly housing expenses on the subject property you're interested in. All right. It's your proposed principal and interest taxes, and insurance, your homeowner's insurance, on a monthly basis. Principal and interest, property taxes, and insurance. PITI, PITI, PITI. Principal and interest, taxes, and insurance. That is your front end ratio. So you take your monthly average income divided by your proposed monthly expense, you get a decimal number. Same thing with your back end ratio. What is your back end ratio? Back end DTI is all other expenses on a monthly basis added to the PITI, your principal, interest, taxes, and insurance. So if you've got a $2,500 PITI and an extra $1,000 a month in all other debt between car loans, student loans, credit cards, whatever, now your back end, your monthly expense is 3,500. You take your monthly income, divide it by that back end number of 3,500. That decimal point is that percentage is your back end DTI. It includes all other minimum monthly payments, whether they're installing or revolving debt that you have. Minimum payment. If it's 25 bucks on your JP Morgan Chase card, that's the number we're going to be using for that. Not the total balance, but the minimum monthly payment. So, in order to see what kind of loan product that you can qualify for, whether it be a conventional product, a first time home buyer product, uh, FHA or a VA, which are government loans, veteran loans, and Federal Housing Administration, um, or a jumbo loan. Maybe you're buying something over the conforming loan limits in one of the expensive counties, or a mansion or something like that. These are the calculations in your these calculations in your DTI, your debt to income ratio, have to stay within a certain percentage, and that is how I know what loan product you qualify for. Okay. Um, if you want to know more about the loan product you qualify for, give me a call. Please shoot me an email. We'll set up a free consultation, or you can take advantage of the second look program that I have to offer, that Hudson has to offer. We offer a second look program to clients, right, who have been previously approved elsewhere. It's a good option because it gives the borrower a little bit of peace of mind, right, and a second opinion on your pre approval. Right? If you go and get a diagnosis from a doctor and it's not so good news, and he recommends a course of action or treatment, you might want a second opinion. Well, same thing with your house. It's good to have a second opinion. Maybe you want somebody a little bit closer to home who knows the area or knows the lay of the land, instead of trusting somebody because they have a little bit better of an interest rate, who's sitting across the country in Oklahoma at their computer desk wearing their khakis like Jake from State Farm, right? Or maybe you just want a better rate to shop around. Show me your loan estimate. Let's have a cup of coffee. Let's have a good discussion. And if you go with me, you go with me. If you don't, no harm, no foul. And they will reward you. Give me a call, shoot me a text if you'd like to find out how. It's a monetary reward, by the way. So I'm just going to add that there. Um, Next is what else are factors that will determine what you qualify for. Well, another one of those factors is the type of property that you're interested in, or where it is located geographically. Okay. Are you looking for a single family home? Are you interested in a multifamily home? Do you want a condo? Do you want a co op? What are the annual property taxes? How much down payment are you willing to put down on that, based on that type of property? The type of home you buy is going to have an impact on the type of taxes that you pay, and the type of insurance that you have to pay on a monthly basis. For instance, a condo has less taxes than a single family, but it's got HOA fees. You're still probably paying less than taxes on a home, compared to a condo, even with the HOA fees, but not always. However, historically, you're going to pay less with a condo than you will a single family. You know, where is your property located? Is it in New York? Is it in New Jersey? Is it in Connecticut? Is it in Florida, where I'm licensed? Out of all four of those states, Florida has the lowest taxes out of all of them. All right. My mom still has her house in Florida. She pays $540 a year. A year. That's what some people pay a month, if not double that here in New York. So, you know, out of the states that I'm licensed in, historically, New York has the highest taxes. But some parts of New York, they have some, pretty low taxes as well. Further up north you go, the better. The closer you get to the city, the higher. And that's how it works. So it's going to depend on the type of property you're interested in and where it's located geographically. To see what you want to qualify for on a monthly basis based on those taxes, based on that purchase price, give me a call, shoot me an email. I'm here to help in any way that I can. And lastly, the last thing on what you can qualify for is going to depend on your credit report. This is huge. Credit. It's huge. The biggest thing. How is your credit? Are you delinquent or default on any debts or federal debt? Do you have any bankruptcies or foreclosures in the past 4 years? What is your credit score? Do you have good credit? Do you have fair credit? Do you have poor credit? You know, do you need any improvements to your credit or credit repair that need to be made? Seeing your credit is going to help determine what loan product you can qualify for. All right. I can guarantee you somebody with a 620 FICO is not going to qualify for a jumbo product. They have very strict restrictions because they are lending a lot of money, millions of dollars usually. So, you know, knowing these things will help determine what loan product you can qualify for. Performing a credit analysis is going to help me and or anybody else obtain a bigger picture of your expenses and your median FICO score that we use to qualify you for, and it's going to help us give you the guidance necessary to qualify for a home and figure out which loan product we will need to look for at your during your pre-approval and ultimately your loan. All right. Um, Folks, I want to thank you again for your time. Please tune in next week for a continued conversation about what you need to know about the home buying process. All right. Next week, I'm going to be discussing a little bit more about credit. All right. And I hope to have a guest speaker on here, credit specialist, somebody who can elaborate on credit tips and how he or she can help, or me can help you repair your credit if you're one of those candidates that need credit repair. And just to tidy up, why I stand out, what makes me me. All right. I educate and I provide guidance to on the home buying process. All right. Whether it's a first time home buyer, a current homeowner, I deliver a personalized touch to their home buying experience and I will guide them from every step from start to finish. The second look program, it's always good to get a second opinion. It's a very good product. Take me up on my offer. It doesn't hurt to get that second opinion. I'm highly responsive and I'm available to answer any questions that anybody has at any given time. I'm here to help any way that I can. Remember, when they're saying no, we're saying yes. Richard Ciuzio with Hudson United Mortgage. Thank you.
I'm also certified in sports nutrition, but I think that one of my most, I don't know, that I love talking about brain health because it affects everyone. And I'm really proud